Yeah, hello all. Good evening. So welcome to today's expiry analysis. So let's get started. So as we can see, yeah, let's start. Let's first start with yesterday's EOD data and how the concept which I discussed yesterday was fairly can be applied even today also. Like for example, we will start with the EOD data. You see that yesterday's EOD data is a bullish. Like for example, FIs, they bought calls and they sold some puts. Although this number is very negligible, but the net effect is that it is a bullish data because they've bought a lot of calls and they've sold puts, and they've also bought some quantity of index futures, and also cash buying is going on from past many days. So the EOD data is bullish. Now, when the EOD data is bullish, the conclusion is that if the market opens a big gap up, then the chances of profit booking would be high. Else, if it is a decent flat to minor gap opening, the probability of the price to travel upside will be there because the big players have to close their long positions. So this is what happened today when the price opened at this level. It was a small gap up. The price did not fall. Because why did it not fall? Because the EOD positions were bullish, and this can all you can see the this bullish print in even in the delta. Like this negative delta is very less, first thing, and you can see that this delta, there is also loss of roughly around 8k of delta. There is loss. So this is not a negative delta. In fact, this is not negative at all, because the delta is also very less, and in that negative less delta also there is a loss. So, and then you can see that immediately the delta increases, right? So there is a good 27k of worth of delta, and then you can see one more big massive delta, and price hits a high. And today we know that it's a expiry day. So you must just mark the highs, except that if there is a trending expiry, the price keeps on going up. But how can you differentiate, or how can you get to the conclusion that the expiry would be sideways or trending? Is because is by using the intraday OI and the max pain levels. So I'll tell you what do I mean by using intraday live OI data. Let me take today's example itself. So when we look at any OI platform who provide the data, like for example, I'm using this sensible, to observe. Just observe the OI change. What is happening? So I mean, this is the start of the day. This is the first, first. So for every 15 minutes, within the ATM strikes, around the ATM strikes of that range, try to get the OI change. What is happening? Now you can see that the green ones are put and the red ones are call. So as you can see that as the price is going up, the put OI is increasing, right? So, and there is a call unwinding, and there is very little call writing. So this shows that the move is genuine, and the move is going the upside. But now for the price to travel, continue for the price to continuously go on the upside, like if it has to be a trending day, what should happen? The put OI should keep on increasing, or it should sustain at the higher level. Like the green bar should sustain, but that didn't happen. What happened then was, after the reaching of maybe highest point of put OI, the put start to decrease, and the call rating starts to increase. You can see the call print coming up and put unwinding happening. So this is what happened. This behavior at least confirms the fact that the price is not going further upside, because there is no further put writing. So this is very simple. So if the price is also if the price continues to go up, and there is put writing, right? If the put writing also continues to go up, then we can say that we can get a trending move. But that was not the case. The put writing kind of stagnated at these levels, and then you can see put unwinding. And then I mean, this is based on the dynamic intraday moves, and then you can see further put writing started to increase, and you can see call unwind. So this basically you can see in the form of the price behavior. Like when this goes at the highest point, the puts start to when you see it reaches the highest point, since the OI data comes with a 3 minute lag from the exchange itself, you can conclude that the uh, uh, put writing would be peak at this time, and then you'll see call writing to start, call writing to peak out. Call writing will be peak at the low, right? Again, put writing will be at the peak, right? So this is how the move happens during the intraday. So I think the why part is clear. If there's any doubts or queries, you can post on the comment section. But the point what I'm trying to mention is that today was a range bound expiry because of this context. There's no further put writing to take the price higher, or there is also no further aggressive call writing to take the price lower. So that is what makes the behavior pretty range bound. And coming to another concept of max pain, so we can look at the max pain for the instruments on expiry day. For so I had also posted it in the community section. The max pain for Bank Nifty was 43,500, and for Nifty it was 18,300. You can Google it to find out the max pain levels. It is freely available. So max pain for Bank Nifty was 43,500, right? So 43,500 is, so what does this mean? It means that on the spot chart, not the futures chart, on the spot, roughly the closing can be somewhere around 43 500. That's what it means. So you can see the closing is roughly around this level, and that this is closing is around plus or minus, it will be 20-30 points. That's it max. So the point is, when you know that the max pain is around 43,500. So let me just uh, draw one horizontal line at that level. So just mark the coordinate 43 500 as the max pain. So what does this mean is, whenever the price reaches the extreme, right, when it reaches the highest point, it's a good opportunity to short it towards the target of max pain. Like likewise, when it reached here, it was a fake kind of up move, so you can short it for the target of max pain. So this is what as a high probability setup can be done during the expiry by using the max pain levels to this is the max pain levels you can short for those targets. So anyway, and in fact, this move you can also confirm that it is genuine or not using the order flow. Like when I come to the order flow analysis now, you can see that the first candle, although I discussed that it is not negative, the further candles are positive, but the positivity subsides, and at the same time there's no negativity either, right? So after this increasing delta candle, you find that there's no red delta. So this shows that the price is range bound and confirming to our hypothesis. So again, you can see that the price maintains its range bound behavior with hardly any delta. And here you can see that at the highest point, you can see this green candle, but you can see almost there is half of loss of delta. So almost half of delta has been lost, confirming that the price is heading downwards towards the max pain target on the spot chart. So max pain being the lowest point, it was very low at that point because the bank nifty was trading at around 43,670 at that level. So it is around 43,500. So 43,500, it was expected to reach. So, and we confirmed here that the order flow was not good. It was not bullish. So the breakout was anyway not going to happen today. So it was a good reversal trade in that context. So overall, the point is that we can use max pain for the rough expiry levels where the price can expire around expiry days, and the intraday OI to confirm whether the max pain levels are shifting or not. So, and you can see that the max pain levels also are dynamic. So I'll just show one example that how max pain level change during the intraday course. You can see here that this is the max pain's line chart where you can see at the start of the day max pain levels actually increased from 43. See, this level is 43. This is 43 300 first, and then 43 400. Yeah, this is the start of the day. Actually, you can see the start of the day is from this line. So at the opening, max pain was 43 400, right? So max pain was 43,400, but it increased. Now, why did this max pain increase? This max pain increased because the range got shifted due to put writing and call unwinding at the starting point. So, I mean, how you can confirm that? You can see through any OI platform. Like for example, if I show in the first half, till at least 10 o'clock, you can find that there are way more puts being written than calls. Right? The put change you can see is 3 crore and the call change is 1.86 crore. So put change is more and relatively call change is less. So because of this, what happens? The range gets shifted on the upside. Uh, so what happened? The ultimately the max pain level remained same. It was 43,500 and expiry was about to happen. Around 43,500. So when you know this that it is going to expire around 43,500, you need not get into that chart of fake breakouts or such things. I think this was I mean this especially when the price tried to break out, I shorted the bank nifty by buying puts at this point exactly because for the target of this max pain. So overall the point what I'm trying to convey is using the OI data we can just come to know that is it going to be a completely trending day or a sideways day, and then through max pain we can arrive at some broad targets like where the expiry can probably happen. So I mean that's it for today's context. And coming to the price part also, we can see that this is a roughly 1 hour chart. In 1 hour time frame I was able to find this a broad, I think, channel which nifty is in. It also took support at that same channel today. And bank nifty, let me show the channel for Bank Nifty also. I think Bank Nifty probably is in a similar. Yeah, I made it on the futures chart. Yeah, you can see on the futures chart, Bank Nifty is also broadly in the similar rising channel. You can see, I think this channel is valid because it has three test points and almost three times price has respected these. So on an hourly chart, you can have this channel made on your respective charts so that it will be handy. And coming to the intraday 15-minute time frame what we discussed yesterday, we see that yesterday I discussed that the price for this swing, just a minute. I think the magnet is on. Yeah, so for this, yeah, for this high, I mean, think that the today's price action is not there, right? So this is what I discussed yesterday, that the price for this low to this high. Now, this is the swing high and swing low. Yesterday, the price closed above the. It took support and it closed healthily above the 0.382 level. Right. So this was a healthy retracement. The price is kind of doing and it is about to break this swing. This is what simple Fibo levels try to convey. Now look at the chart, what it did, actual chart. So you can see that the first candle and then second candle broke that, and it stayed above that for quite some time. And overall price, you can see, yeah, when it closed, let me remove this. Yes, so the price, as you can see now, is roughly on the same. It has reached the swing high, so it has achieved the complete objective. So this is what we discussed yesterday's price action. So anyway, overall markets look bullish. Today's expiry context, and globally today I think one more series of data has come out, the PPI data. So let's see how the Dow and the US markets react to this and how the data unfolds. But overall, since the FIs are buying cash market continuously and derivative data is looking bullish, so the markets are bullish and we are heading high. And coming to one more fact about the futures OI, we can see that the when you look at the price versus OI, you find that the OI is consistently at some elevated levels. It is increasing and the price is also increasing. So OI increasing, price increasing can be a case for long buildup. So we may be going towards some highs. So anyway, let's take it one day at a time. So hope this analysis was helpful. Uh, Thank you.